Alrighty, everyone. We'll get started here in just a moment. You know, I'm going to be trying out this new mic that I just picked up not too long ago, probably about, I don't know, maybe 2 days ago or so. I've been testing out some of the settings. It's been a long time coming because it's been really windy in New York. Hopefully you guys can hear me. Before I start rambling on, I guess it's probably wise to ask the audience if you guys could hear me. So let me know if you could hear me. Maybe just put a thumbs up in the chat. But yeah, long time no see. It's good to see everyone. It's just cold, man. Really, really cold. Lena, what's up? Alan. Okay, looks like the mic is good. Yeah, anyway, not that anybody cares, but, you know, it's just been so cold. It's been so crazy cold in New York and very windy. I think this is probably the windiest winter season that we've had, I would say. Obviously now that it's spring, but I mean, man, it still feels like winter. It was only about 50 degrees today, but with the wind chill, it felt like in the 40s. Yeah, it's been crazy for me. Apologies that I haven't been live, but we have been uploading videos every day on the channel. So hopefully you guys were content with those. Lots of stuff happening in the market, so I thought I kind of had this obligation to come on tonight just to talk about the markets because there's a lot happening. Obviously, we are in correction territory now across the board on all the major equity indices, the S&P, the NASDAQ, and the Dow. I think this is going to create some unbelievable opportunities for us as this market kind of pulls back here. Now, Asia just opened up and really getting slammed. Japan, I think, is down about 5%. Futures are down modestly here in the United States. Korean Kospi is also down a little bit, but have a little bit of a bid in Bitcoin. But the true tell, as you know, is crude oil. And I always like to look at the light crude oil futures. That contract ticker is CL. We're up about 2% or about $2. We're trading over $100 a barrel on light crude oil futures. And to me, we won't get too much into the politics of it all. You know, unfortunately, current market conditions is very geopolitical right now with the war in Iran. I'll just give you my basic take on it. If you want more of my in-depth take on what's going on right now with the war, with the geopolitical stuff, go over to our X page. You could check it out at Walks Wall Street. But essentially what we were told at the beginning, okay, we were told this was going to be a 24-hour thing, maximum a 48-hour thing. We're going to go in there, we're going to drop some bombs, we're going to head out. Well, long story short, and about a month later, that doesn't seem to be the case, right? I posted that the messaging, the verbiage around this was very reminiscent to the pandemic, okay? And again, I'm trying not to put too much of my personal political opinions in here, trying to keep it as neutral as possible, but that is kind of, you know, as I was talking to some friends and some colleagues, that's kind of how it came off, right? 2 weeks to flatten the curve or whatever it was, 14 days to flatten the curve, turned into about 2 years of locking down vaccine passports, all that stuff. And, you know, we have not only Trump, but Marco Rubio really hammering, almost, I guess you could use the terminology brainwashing, that no boots on the ground, no boots on the ground, no boots on the ground, 24 hours, 48 hours. Now, about a month later, it seems as if we're probably going to go in to boots on the ground. Now, the latest messaging from the Trump administration have my, I pulled up this article that just came out from the Wall Street Journal. It says, Trump weighs military move to extract Iran's uranium. This seems as if they are prepping the public, prepping the masses for boots on the ground for a very strategic and targeted operation that will probably involve special forces, you know, the whole 9 yards, to target these facilities where allegedly Iran is, you know, could be or could not be holding uranium, right? We don't know if it's real. We don't know if it's there. You know, there's some ambiguity there. I'll leave that up for you guys to decide. I won't really give my personal political opinions on it, but it seems that's what we're gearing up for. Now, bringing it back to markets, markets are really pricing this in, right? The S&P 500 is, I wouldn't say well off the highs, but we are below the 200-day moving average. I would say the first target that I'm looking at for the S&P is going to be the swing high just before the April tariff crash, which was February 18th of 2025. The S&P was trading at about 6138. Now, assuming we get there, that's really only about a 12% correction on the index, which is well within normal range, right? We're probably going to get, if you look at historical data, we usually get about one correction of about 10 to 12% on the S&P once every 20 months. So that falls well within the norm. For us as investors, that's probably going to pose, well, not probably, definitely going to pose a really big opportunity for us. Okay, because if the S&P goes down 12%, well, a lot of the leaders or the former leaders of the last bull market are going to be down multiples of that. If you look under the hood of the market right now, you're already seeing individual stocks down 30, 40, 50, even 60%. And that's not just a lot of the high beta SaaS stocks. Obviously, those stocks have been crushed. There's been a re-rating of valuations in enterprise software and SaaS due to AI and the like. But there's also been a plethora of sectors that have experienced a significant drawdown. The only bright spot, now I shouldn't say the only bright spot, but I'll say the main bright spot in this market has been energy. Energy stocks, oil and gas have been performing exceptionally well. And if you look at the XLE, which is the State Street Energy Select ETF, we're trading at all-time record highs. So there's always a bull market somewhere. You just need to know where to look. We're going to dive into that a little bit more today, but I think that the biggest thing that I kind of want to hammer home here is that there are going to be unbelievable opportunities that come out of this correction. Okay, unbelievable opportunities. So wait for that follow-through day. What was the other thing I was going to say? Oh yeah, so one other thing that I like to look for, the bottoming signals of the market. Number one is really the VIX, or the CBOE Volatility Index. Currently, right now, we're trading at about 31 on the VIX. For some historical perspective here, if you go all the way back to the very bottom of the 2025, April 2025 tariff crash, right? The VIX blew off to about 58. And usually when you have these very parabolic spikes in the VIX, it's around 58. If you want to go all the way back to the pandemic here, I believe that was the all-time record high for the VIX. We blew off to about 84. That usually coincides with major market bottoms. Thinking about investor psychology, usually most investors wait until the index is well off of its highs to start hedging. They'll buy puts while the market is about 20 to 30% off the highs, and that's going to show up in the VIX. They're going to overpay for put options, and that's really when we should start to be taking the other side of the trade, looking for opportunities to get back in this market and buy either the S&P, the index outright, or individual stocks that are showing high RS, or high relative strength. Okay, I always say that I really thrive in these environments. If I do a post analysis on my performance in the market, the vast majority of the gains that I make in the market are just after major drawdowns. It happened in April 2025. It happened during the pandemic. Before that, you go back to the Christmas Eve crash of 2018. These are all unbelievable opportunities to get in really, really good buys on earnings growers, on sales growers, companies that are really performing well. So even though times like this might be scary, right? It's important to always be looking for those opportunities, because let me tell you, there's going to be no shortage of opportunities that come out of this correction. And with that, that's really all I got. So let's go ahead and say hello to everybody in the audience, and we will get started. It's good to see everybody again. Let's see who we got here. Let me scroll up to the top. I see our friend Sabrina Fair, Teresa Diaz, Jennifer Gala. I see James from Costa Rica. Good to see you, James. Trucy TV, welcome. Kelly is here. Sophia Waves. Alan, how are you? DC322, Tatted T, Jack Jackson. Lena Sandoval, always a pleasure. I see Debbie. Hope you had a wonderful weekend. I see Tin Man. Kelly Miller. James, Eyeglass Lady, Gary Carpenter, RJ, Crypto Meme, hope you're well, Patrice 2020, and many others. NNB 045, Nelly. All right, let me go ahead and put my stuff away, and then we will we'll commute back to Grand Central Terminal, because I have to head home. All right. Let me know what you guys think of the audio, by the way. I'm testing out a new audio setup, which should cut down significantly on the wind noise. So we shouldn't be having any wind noise at all, hopefully. In theory. Ali French, Sabrina Fair, what's going on? We'll go ahead and make this left on 5th Avenue. Right now, we are on the corner of Central Park South and 5th. We are looking back over at the beautiful Plaza Hotel. But unfortunately, there's still a lot of construction stuff around the park, around the Grand Army Plaza, well, soon to be brand new Grand Army Plaza South. Hopefully that'll open up once the weather improves. Peter says, using the current methods of the VIX, the 1987 Black Monday crash would have had the VIX over 100. Good to see you, Peter. Sawtooth says, you're becoming a techie. Yeah, I'm testing out this new mic, and I'm adjusting the settings a little bit because I don't want to drown out all of the background noise of the city, because I think that's one of the things that many people like most about the live streams, is to be able to hear all the noises and the craziness that are going on in the city. But at the same time, hopefully I can cut back down on some of the wind noise. We're now looking up at the Steinway Tower, 111 West 57th Street. And we're also looking up at the headquarters of Apollo Global. Now, there was an interesting article that came out today in the Financial Times. Apparently Apollo Global, well, I guess I'll preface this by letting all of you know what Apollo Global is. For those of you who don't know, it's one of the largest private equity firms. And they have, obviously, their main anchor headquarters here in New York. There was a Financial Times article that dropped today, which we covered in today's video, that they're essentially stating that they're looking for a second headquarters, a second location. And they alluded to the fact that the vast majority of growth in terms of their employee count going forward would happen out of that said new headquarters. Now, they don't have the headquarters in mind yet, but people familiar with the announcement are saying that it's either going to be Austin, Texas, or somewhere in South Florida, which probably means Miami, Fort Lauderdale, or Palm Beach, which has gotten a lot of people kind of cranked up. There's been a lot of news about how there's a mass exodus from New York. A lot of the financial firms are leaving, and people are going to be moving away from New York forever. But I kind of think of it in a little bit of a different way. I've said my piece on this many times, but I guess I'll kind of state my opinion on the whole thing again, as we're looking up here at New York City's Billionaires Row. I believe there's two things going on. There's some normal hedging of your bets that are going on, right? Obviously, you can't ignore the fact that the new mayor of New York City, Zohran Mamdani, is kind of making a big stink about raising taxes. Yes, that does have a little bit of to do with it. But I would say the normal progression of business in general is going to be having multiple main headquarters, so to speak. And not only just for doing business, but for quality of life reasons. And the pandemic really taught us that we can work from wherever and still be pretty efficient. So it only makes sense for big financial institutions, particularly wealth management, the hedge fund business, to set up offices where there's a lot of wealthy people within close proximity to New York, right? If you ever take a trip down to Miami and Palm Beach, there's a lot of wealth down there, okay? That's undeniable. And there's also a lot of New York wealth down there, okay? If anybody's ever frequent Palm Beach, Florida, you walk around, Worth Avenue, 9 times out of 10, you're going to walk past somebody with the New York or New Jersey accent, right? Just the way it is. There's been a lot of transiency between New York, New Jersey, Connecticut, and South Florida. So I think there's two things going on. But you will always, in my opinion, have New York City being really the anchor for finance, business, tech, and big law. For a few reasons. I would say the biggest reason is that the Northeast is plentiful in terms of its education, right? All of those educational institutions are feeders into the best companies. And it's not just at the collegiate level. Yes, of course, the Northeast has the Ivy League schools. And New York City, you have Columbia University. If you go a little bit further upstate to Ithaca, New York, you have Cornell. And even though it's not in the Ivy League, you have NYU and many other great schools. You drive maybe 3.5 hours, you're in Boston, you're at Harvard, and you could take a 2-hour train from Grand Central Terminal and be in Yale, right? So naturally speaking, a lot of that talent is going to get pulled into major cities in and around the Northeast, which includes, but is not limited to, New York City, Boston, etc. Okay, I think that fact alone is always going to anchor New York City, and I would just probably extend that to the tri-state area in general as a main beacon or a main hub for business, finance, and commerce, always, right? Also, if you're working on a big deal, right, if you're working on a major transaction, if you work on Park Avenue at Blackstone, you could walk across the street and pretty much be at every single major investment bank on the street and every single major big corporate law firm. So if you're working on transactions, you're working on deals, it's very easy to get those big players or those big rainmakers together in one setting to get those deals done, to get those transactions done, and to make things happen. So naturally speaking, the way I think about all of this news about everybody's leaving New York, Mamdani is killing the city, right? I would say that's just all like New York Post clickbaity headlines. What you really have to look at is more than one city can win. And I think Miami's a great city. I think Palm Beach is a great place. I think West Palm Beach is a great place. And it's close proximity to New York. Okay, if you work on Wall Street, you're a big hedge fund guy or girl, you could go to the airport and be at Palm Beach Airport in 2.5 hours. Okay, you can make a day trip, knock out all your meetings in Palm Beach, fly back to New York. Okay, it's very difficult to do that cross country, right? If you're gonna fly New York to LA, it's just too far, it kills the whole day. So I would say that New York, Miami, Palm Beach, Greenwich is really always gonna be the trifecta. I don't think you need to take away from one city in order to give to another. The economy is so massive, and I think the growth in the United States in general is going to be so massive over the coming decade that you're going to see those cities, which were predominantly tier 2 cities, really rise up and compete, right? Now, competing doesn't mean dominating, and if one city has a meteoric rise, another city is going to have a meteoric fall. That's not kind of how I see things, at least on the ground floor here in New York. I don't know, what do you guys think? I mean, you probably see all the headlines, read all the same articles that I do. Do you think there is some truth to the fact, or maybe the opinion, that New York City might be dying? Hey, Professor Darillo, good to see you as we walk down Fifth Avenue here. It's good to catch up with everybody. Madison 32, cheers. Christie says good evening. Tom, it's been hot here in Southern Illinois, really. I wish it was hot here in New York. We had like one day, maybe 2 days of 80 degrees in New York, but now it's, I wouldn't say it's cold, it's just like tediously mild. And the wind is kind of what makes it feel cold. Anyway, this is the St. Regis Hotel. Laced mushroom. Says you're big on Texas. Intro says SF. Yeah, San Francisco is a great town. It just could be run a little bit better. But San Francisco is great too. You have the peninsula. This is another stunning building. Hey, Metal Mom. Thanks for joining us. Yeah, the city's kind of quiet tonight. For a Sunday night, the city's kind of quiet. But quiet is good, at least for us, anyway. Paul says the financial district has changed, and I think that trend continues for New York City. Yeah, I mean, you know, for every article that you can read about, you know, a business or people hedging their bets out in New York City, there's also been a lot of investment, and will continue to be a lot of investment into New York City, right? We talked about 270 Park Avenue, JP Morgan's brand new office tower. We're going to have 350 Park Avenue, which is going to be the New York City headquarters for Citadel. Now, Ken Griffin's Citadel did relocate the corporate headquarters away from Chicago, Illinois to Miami, but they have a lot of employees here in New York City. Okay, I don't know the exact head counts, but I mean, if I had to guess, right, and I don't know, maybe someone can look this up on ChatGPT or Google, I would say that Citadel probably has the vast majority of employees in New York City. I wouldn't be surprised to hear that. This is the University Club here. Hey, Frank. This is Tom. New York will always be a base/hub for the creative class. I agree with that too. Man, the University Club looks fantastic. Michael says New York City can decline. We saw it in the 70s and the 80s. Yeah. Jared Vincent, welcome. Someone's asking what camera am I using. I am using just my iPhone 17. Yeah, Ken says when the tax dollars disappear, the infrastructure will suffer. I mean, you have a point. That is a very, very real point, which I'll kind of touch on in a minute. I think the governor, and not to get too political tonight, but I think the governor could be framing things a little bit better. Hey, Jamie Pope, thank you so much for your $25 donation. It says, hey Tom, New York City, LA, etc. will always be in leadership positions when one office leaves, another expands. Yeah, I mean, I definitely agree with you. And New York City is so unique. I think New York is just too iconic of a city and too unique for it to ever, decline that substantially, regardless of how incompetent the leadership is, right? And that's not taking a shot at the current administration. I personally disagree with the current administration, but I wish them the best, and I hope they do really, really great things for the city. But unfortunately, I believe our politicians know that, okay? And both at the state level and the local level here in New York City, politicians in New York State know that this is such an amazing state. Everybody wants to come here, right? That's something that's so unique to New York. It's not just everybody in the United States at some point wants to come to New York City. It's everybody in the world pretty much at some point. Like, it's almost like this romanticization of coming to New York, coming to college here, building a business here, getting a job here, right? Which can sometimes cause its own set of problems in New York, but knowing that it's such a great place, I think government can kind of sometimes stretch their powers because they know that no matter how bad it gets, some people just won't leave, which can lead to inflated, bloated government. Now, I would like to say something kind of complimentary to the current administration here in New York City that is led by Mayor Zohran Mamdani. He seems to be pretty receptive around the fact that New York City has a lot of waste, fraud, and abuse, right? He actually agrees with that. And apparently, I mean, we'll see how it turns out, he's launching specific audits to see, what we can do better. How can we optimize? How could we trim the fat in some organizations, reallocate capital to other parts of government? And I think that's a pretty admirable thing to do. Not to go down a huge New York City rabbit hole in terms of local politics here, but there's a lot of waste, okay, in New York City. There's a lot of corruption here, and there's a lot of misallocation of capital. I always say it's never really a money problem. Money doesn't solve issues. If anything, money could exacerbate issues and make it worse, okay? I think California spends more money on homelessness than any other state in the United States, yet we have more homeless every single year. I believe New York City, there was an article in the New York Times that I was reading. Apparently, New York City spends about $83,000 a year per homeless person, right? Which to me doesn't make any sense. At that point, I think I posted something on X, and I said, if that's true, okay, assuming that's true, that we spend $83,000 a year per homeless person we have, we might as well just start putting these people on the payroll, right? Because when I walk down, Fifth Avenue, when I walk down 6th Avenue, Financial District, right? If you go up to Harlem, 125th Street, by the Metro North train station, there's homeless people everywhere, and they're not getting help, right? They're living on the street. They're still addicted to drugs, but allegedly we're supposedly spending about $83,000 per person. How about we stop spending all of the money and we just go around to every single homeless person, get their bank account, and we just deposit the money in their bank? Obviously, I'm being a little bit, narcissistic there when I'm saying that, but the point I'm trying to make is that they're not being helped But if we're spending there's some people that live and work in this city that make less than $83,000 a year, okay? You know that the funds are being misappropriated and misallocated. If we're spending so much money, higher than median income in New York City, on these homeless people, but they're not even getting helped. It's crazy. We should just give them the money directly. Anyway, this is East 51st Street, 5th Avenue. This is a great shot looking uptown. You have the old Versace flagship here, which is now Skims. Yeah, that's true. Chris says the problem is NGOs take about 80,000 of that 83,000. It's a lot of like administrators, right? If anybody's ever worked in government at the state or the local level, even at the federal government, there's just so much bloat. All of these administrators are making big six-figure salaries. So it's kind of like, you know, when they do those audits of charities. Has anybody ever seen any of those studies? There's a lot of charities out there, apparently, that for every dollar that somebody donates to the charity, only like 10 cents actually trickles down and goes to the cause. The other 90 cents is used to, you know, pay administrative salaries and marketing and all this other nonsense. So I feel as if blockchain and crypto could actually solve a lot of that problem. Utilize smart contracts to make sure that, you know, if you donate $1, you know exactly where it's going. You could track all of that on chain. Bosses Tom, what do you think of the new 2 World Trade Center renderings? I think it looks pretty good. Now, maybe I'm a little bit, how should I explain this? Kind of tired, because if anybody knows about the original plans to rebuild the World Trade Center, speaking of corruption, that was just, I won't go into it, but do some research about what happened after 9/11, okay? It should not have taken almost a decade to build the World Trade Center. So just to see some progress about this whole project being built out now is really good. And I believe American Express, or Amex, is going to have that whole building at 2 World Trade, I think. I mean, talking about a positive, that was a massive investment, Amex. Well, their headquarters is already down there anyway, but that's going to be a great building. It's going to be a really great space. And with that, they'll probably expand operations, hire more employees to live and work in Lower Manhattan, so that's good. It's all good news. Let's cross the street this way. Hey, photos from around New York. It's good to see you. Guru says, are you near Rockefeller Center? Yeah, we're right outside Rockefeller Center right now. If I point the camera up, you'll see 30 Rockefeller Center. This is where you would go for the top of the rock, which, by the way, is my favorite observation deck in New York City by a long shot. Now, the reason why I say that, oh man, that wind is crazy. Now, the reason why I say that is because it's a whole experience. You get a little history lesson on John D. Rockefeller Jr., you get a history lesson on the assemblage. How did he assemble all of the land, buy out all the surrounding buildings? How did he present the plans to build Rockefeller Center? I won't ruin it for you, but it's a very cool history lesson that you get with the experience of going to the top of the rock. This seems interesting here. Debbie says we don't hear the wind. Well, that's good news. That means the new microphone setup is working. Hey, Astrostorm, thank you so much for your support. That's correct. We did pass 100,000 of you here, so thank you. $547 says Magnificent 7, reaching close to their 20 times forward PE. Would you buy the dip? So I wouldn't buy any individual stocks until we have a follow-through day, right? And one of the things that we really need to be paying attention to in this market is, number one, the big picture, right? Out of this correction is going to have some amazing opportunities, like some insane opportunities. That's number one. Number two, the market is for sure, and again, you know, the stream is naturally going to be more political because the major driver in the market right now is a geopolitical event, which is this war. What we said at the beginning of the stream is that it started out as this is going to be a 24-hour thing, then it was a 48-hour thing, then it's going to be a few weeks, and now, if you read the Wall Street Journal at all, or the New York Times at all this weekend, what they're essentially prepping the public for now is boots on the ground. If I had to make a bet, right, just a random bet with a friend, I would say we're 99%. We're going to have boots on the ground in Iran within 30 days. That's my bet, and I think that's going to send the market reeling. But I think that's what will also bottom the market. I posted something on X earlier this weekend. I think it was Saturday. I think it was Saturday morning. And I said, if you study past invasions and how it correlates to major market movements, I'll bet you anything that there's going to need to be some major catalyst that gaps this market down. You'll probably have a circuit breaker thing. You know, people will be freaking out. The VIX will probably go to 70, but will probably put in the low for the market. That'll probably be the worst of it. And I think the announcement of a boots on the ground invasion of Iran will probably do that. Okay, that's my personal opinion. I think that's going to create some amazing opportunities. Now, there's already been a lot of good opportunities in the market, right? If you look at individual sectors within the S&P 500, energy is doing phenomenal. Okay, you go across the board, if you just look at the XLE, trading at new all-time record highs, Chevron, ExxonMobil, you know, even some of the more, I would say, trendy names like Bloom Energy, you know, still trading at the upper end of that handle. So there's always a bull market somewhere. You just need to know where to look. The biggest losers have been SaaS, software as a service, enterprise software, which is not only getting crushed just due to the geopolitical news, but it's really getting crushed due to this multiple compression and the re-rating due to the AI fears, right? But out of this correction is going to be just monster opportunity. I think right now the S&P is only off about 9% from its all-time record high. If we test the February swing high just before the tariff crash, that would be about 6150 on the S&P. That's normally, you know, naturally the first major target, I'd say. And that would only be a 12% drawdown in the index, which is nothing out of the ordinary at all. That's like every 12 to 18 months, or I should say 18 to 20 months, you should expect the S&P 500 to go down 12 to 15% every 18 to 20 months. That's like par for the course, normal correction. So it's sort of like, in my view, the stars have aligned. The market has been looking for a reason to sell off, right? We've had this unbelievable rally since the lows of April 2025. Literally, you could have thrown a dart at any stock and it went up hundreds of percent. I think I have to go out the other way. Let's cross here. So this is going to be a great opportunity for stocks to reset, bases to reset, valuations to come down, and we can buy some really great businesses, some really, really great businesses coming off the next follow-through day. But I just don't yet think we have that low in the market. And the reason why I say that is because you kind of have to think back to all of the previous major market bottoms. Okay, I remember vividly April 2025, just how crazy it was. I mean, people were freaking out about these tariffs. You had Bill Ackman posting on X that, we're going to have no food on the shelves. You had, CNN bringing on that Peter Tolchman, the Einstein of Wall Street, and he's, they're drawing pictures of cargo ships and there's going to be no food on the shelves. It was just all ridiculous stuff. You're going to need something like that. In every cycle, there's something that bottoms the market, right? It was the pandemic that bottomed the market in 2020, right? In the tariff crash, you had, everybody saying that there's going to be no food. There's literally no food on the shelves, right? This needs to be something. Obviously, the war has been raging for about a month now, right? 3 to 4 weeks. But what is that one variable that everybody's hanging on to? In my view, that's physical U.S. boots on the ground, right? If you listen to anything that the administration has been saying, particularly Marco Rubio, it's, we don't think we need to put boots on the ground. We can achieve our goal without boots on the ground. But nothing is off the table, right? And you just kind of, if you understand framing, and if you understand persuasion, the administration is using these framing techniques that I'm very, very familiar, where it's like prepping the target, right? You're prepping the public. You don't say, we're going to fully have boots on the ground, but every single day you walk it slowly forward. You say, 24-hour war, 48-hour war. Well, no, actually, maybe a few weeks, there's some more things we need to do. And then the next thing you know, it's a full blown out ground invasion. I'm not saying that's going to happen, but I think in some capacity, we will probably have, I would say 99% certain now, we'll have some sort of U.S. troops on the ground in Iran, and that is going to freak a lot of people out. That's going to freak the market out. But I also believe that is what's going to put a bottom in the market, right? You'll wake up one day, you'll be watching CNN, you'll be watching Fox News, and it'll be, a helicopter went down, right, when we were trying to extract the uranium out of this site in Iran. We have U.S. casualties. It's going to be really scary. It's going to be freaking crazy, right? X is going to be erupting wherever you get your news, Twitter, and you're going to be like, oh my God, this is going to be a really, really bad war. And you're going to see more articles coming out with headlines saying, Goldman Sachs is going to say oil is going to go to 400 because the Strait of Hormuz is never going to open. We're prepping for commodities to be in a 10-year bull market. Once you start to see things like that, then you could say, okay, let's go ahead and put some money to work here. Okay, the VIX is at 70. The VIX will probably be at 70. You'll have all these crazy headlines. You'll have all these experts saying that oil is going to go to 300. It's going to be, the Strait of Hormuz is never going to open, right? A nuclear warhead is going to explode. That's what's going to put a bottom in this market. And then you'll just see this market rally and rally and rally. And the news is going to get worse, right? What usually happens is the market bottoms on bad news, then it rallies on even worse news, and then once the news starts to kind of calm down, you're about maybe 10% done in the rally. That's how I think it's going to play out. Doesn't mean it's going to play out like that, but that is what I would think. I mean, what do you guys think? in terms of the market, right? Because I mean, crude oil futures right now is trading at what, $101? We'll probably have some sort of blow off in crude. Yeah, Mark says it will rocket on a peace plan, though. Hopefully we do get that, right? For the sake of, life, hopefully we will get that. Speaking of the news, we're adjacent the News Corporation building right here. Hey, Michaela, good to see you. Thanks for joining us. We're looking at 1221 Avenue of the Americas. You can see right into the dining room at Del Frisco's, but you see that long line? That's a Del's Famous. This is the best halal food anywhere in the city. It's great. It's in between 49th and 48th Streets on Avenue of the Americas, 6th Avenue. It's really good. Hey, Florida boy in Atlanta, Madison 32. Deja Vu's here, welcome. Peter says you have to put boots on the ground to get the uranium. Yeah. I was reading all those articles today. It's kind of like, that's going to be the sales pitch, right? It's all a pitch, right? That's the sales pitch. Yeah, Florida boy in Atlanta says it's great to see a live show. I'm really happy to be able to be back live chatting with you all as well. It's a lot of fun. The weather's just been horrible and I've been very, very busy, but I have managed to get a video out a day for all of you. This is a great shot of 270 Park Avenue here. This is JP Morgan Chase office tower. Really great shot. But I'll also say this, even though the S&P, as of now, right, it's only off about 9% from all-time record highs. The NASDAQ's probably maybe off 10%. Under the hood of the market, right, and this is why I always kind of parrot that talking point of you have to look under the hood of the market, the individual sectors. What are the sectors that are leading? What are the sectors that are lagging? Guys, there has been so much damage, like a ridiculous amount of damage, like almost 2,000 dot-com bubble burst and 2021, high beta growth stock bubble burst level of damage. A lot of these enterprise software stocks and these SaaS software as a service stocks just obliterated. I mean, absolutely obliterated. And, I kind of go back and look at all these charts and I'm like, oh my God, this is like, I made most of my money in these names from 2015 to 2021, and now they're trading at levels, lower than when I first purchased the position, when I was trading these back in the day. And it just goes to show you that there's always going to be something new in the market. There's always going to be a new sector that's leading. So you really need to have good sell rules, and always be following the high RS, the high relative strength in the market. I mean, we've gotten just this unbelievable breakout in energy. I think probably energy is nearing the end of its run, I would say. I don't try to call tops or bottoms, but just wow, what an unbelievable run for oil and gas. Energy in general has been fantastic. Static says can't forget about luxury stocks. Yeah. Hey, did you see that? There was a really good article in the Wall Street Journal yesterday for the weekend edition about the amount of high net worth and ultra high net worth families in the United States. And it's really, well, I was going to say it's shocking, but it's not. Go check out that article. This really goes to show that K-shape in the economy, really ever since the lows of the 2008 financial crisis. I mean, the amount of wealth creation that's happened in the United States is really incredible. And they had a phenomenal infographic that coincides with the article that shows the breakdown of America's wealthiest families. And by and large, their wealth is tied up in assets, right? Which just goes to show really what's created this K-shape in the economy. It's that, yeah, even though asset prices have performed really, really well, if you don't own those set assets that are going up, you're going to get left behind, right? You know, there's many people that think, you know, Elon Musk is just, which he'll probably be the world's first trillionaire, but they think he literally can just go to the bank and pull out $1 trillion in cash, right? They think that's his liquidity. The lion's share of his net worth is wrapped up in his companies, right? The valuation of his companies. And since the market has performed so well since the lows of the 2008 financial crisis, the inflation, right? You could say, you know, inflation in asset prices that have gone up. If you're a big executive at a bank and you get stock options, right? Or if you worked in big tech for the last decade and you get, you know, an employee stock purchase program, you've probably done really well. You've probably done really well. But if you're a regular wage earner who just earns a wage and doesn't invest any of their money, well, I mean, it's been really, really difficult for you. And I think that's why this administration in general, and not just this administration, really all politicians are kind of aligned on this, which is really the only good thing, I would say, is that we need to get the vast majority of Americans into the investor class, right? Society is not gonna be good if you have these extreme haves and extreme have-nots, right? We need to show the average American that they deserve ownership in the country, right? And how do we do that? Well, I think the number one thing is probably through education. But these new accounts, when you're born, I think the government's going to give you like $1,000. It's better than nothing. Now, is it going to move the needle? Probably not. But what I think it will do is, let's say if the kid's 18 years old and they see this account has been accruing, you know, compounding interest for them, they're kind of going to get that little bug and they're going to get curious about it. And maybe that will get them into investing. But you're never going to solve the wealth inequality problem unless you get more people to participate. And unfortunately, there's just not a whole lot of people that participate on the scale that we need them to participate. There's not a lot of people out tonight. Madison 32 says, Tom, I haven't given up on service now. Well, look, sometimes it's actually good to give up on a stock, not to be married to a stock. I mean, depending on what you're doing, if you're running a long, short portfolio, I mean, you can't let these losses get out of hand. So I don't know what, obviously everybody's investment time horizon is different, but if you're managing a portfolio and you're managing for a P&L, you can't let these can't let these things go. I mean, I'll give you a kind of a cool, not really a cool, but an interesting story. Man, I can't stand those pedicabs. They're horrible. But I would say that there was this company called Atlassian, well, still is. It's traded under the ticker symbol TEAM, T-E-A-M. And that was my biggest winner ever, was Atlassian. And now, I mean, I don't even really look at the stock anymore because it's just off my radar. But I mean, when these TMLs top, they top, and oftentimes they never come back. I think Atlassian now is down about, I think almost 80% off of its all-time record high, 80%, and it'll probably never go back to all-time record highs, right? So it's important to have those sell rules and manage, your P&L, because I mean, if you make a fortune in a name, right, you can't round trip that, you can't. Let me catch up on some of the chats. K. Morgan says most Americans live paycheck to paycheck and have little in reserve for saving and investing. Yeah, I mean, you're exactly right. And with the cost of living, oftentimes it's very, very difficult to set aside money to invest. But I think it's important to invest something, right? I do believe that everybody could find a way to come up with at least a little bit something extra, or, not to shift gears on the conversation too much, but your point is valid, and you're 100% correct, which just kind of magnifies the point that it's so important to shift Americans into the investor class, right? It's just so critical. Here we are at Bryant Park. Now, when we were doing a walk around Rockefeller Center, I couldn't believe the ice skating rink was still up at Rockefeller Center. I know it kind of looks nice, right? But it's kind of a little depressing for me to look at the ice skating. I can't do the ice skating anymore. It's just been so cold and nasty in New York. Like, rip the ice skating rink out of there. I don't want to see anybody ice skating anymore, which is good that the Bryant Park ripped the ice skating down. And now we have that beautiful Bryant Park lawn, which looks phenomenal. We just need the weather to cooperate. But Bryant Park looks fantastic right now. I wish I could show you guys, but it's closed. I'll get as close as I can. All last week I was looking at the landscapers working hard on prettying up Bryant Park. They've done a phenomenal job, but you could see that Bryant Park fountain, all the tables and chairs, and that huge green lawn now, right behind the Steven Schwartzman building. Looks great. Yeah, Professor Dario, fantastic. Hey, Mike Skate TV, it's good to see you. Good to see everyone from Japan. Someone says, great financial crisis 2.0. Well, I think the biggest thing, I would say the biggest risk in the markets now, as we all know, is private credit. There's going to be, I would say, ballooning losses, loan losses in private credit. You're already starting to see investors want out. And a lot of these big private equity firms like Apollo, Blackstone, many others, not to just single those out, I mean Blue Owl as well, are limiting withdrawals, right? Because when the market kind of takes a turn for the worst, you start to get a lot of redemptions, right? People want their money out. It's just human psychology, right? When everything is going great and the markets are going up, everybody wants it, right? Everybody just wants to throw their money at you. Everybody, wants to write you a check, right? But when you're starting to get these loans get marked down, right, people naturally want to withdraw their money. So now a lot of these big private equity firms are capping withdrawals. So there's probably going to be, I also would like to look at it from an opportunity standpoint. Very seldom, if at all, will we retail investors be able to take advantage of those opportunities. But institutions will have a field day, buying up all the carcasses after the private credit ruin that is currently hitting us and will probably continue to hit us for some time. I mean, the problem really is, again, these enterprise software and SaaS companies, these software as a service companies, their valuations have really been hit, mainly due to this re-rating due to the AI trade. So a lot of the loan losses could be quite significant here in the private credit space. Hey, NNB 45, good to see you. But yeah, out of this correction, there's going to be some amazing opportunities for us. Like, not to repeat myself again, but I always get excited when we have these big drawdowns in the market because I know what's coming after them. Right? It happens every time. You'll have a big capitulation in the market. The VIX will go to Mars, and this market will follow through, and nobody believes it. The S&P will be up 3%. The Dow will be up 2,000 points. And it'll be like, oh, the best day since, 1990, whatever. And nobody will believe it. They'll think it's a bear market rally. This market will follow through. And we'll just get so many amazing leaders out of this. I mean, if you kind of do a post-analysis just from the tariff crash, I remember I was getting so much, hate from the tariff crash. Everyone's like, no, it's the next financial crisis. There's going to be no food. People were saying that I was apparently I voted for this, and you get what you deserve. Blah 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 blah. And we just had a follow through day, and I'm like emailing these people back. I'm like, we just had a follow through day. You got to start buying some of these names with high RS, and all of those names went on to go up. Like if you look at Hood, which was, I think, the second best performing major TML of the cycle. Hundreds of percent. Palantir up hundreds of percent. Really, all of these great leaders emerge from these drawdowns, right? So we had a great bull market from about April 2025 until now. If this bear market falls within normal duration, I mean, we're on the other side of this thing in 4 months, and we could be in a pretty hefty bull at the end of the summer. So always be ready to change with the tide. And out of this, I think we're going to have some really phenomenal leaders come out. Vermont says, are we headed towards MSG? Yeah, well, close to Madison Square Garden. We're on 37th Street. We're not going to go all the way to Madison Square Garden tonight, but yeah, we're headed in that general direction, more so towards Macy's and Herald Square. This building is almost completely done. Right here on the corner of 37th Street. This thing went up pretty fast. This is going to be brand new condos. But if you guys are enjoying the stream tonight, feel free to subscribe to the channel, leave a like on the video. And I know I've said this many times, but if you're more so interested in the stock talk, the market talk, the financial talk, I am starting up a second channel very soon. I know I've been saying that for a while. Talks in Wall Street. So if you're interested in that stuff, do a more deep dive on the markets. If you type !talks, TALKS, the Nightbot will drop the link to that YouTube channel. And it's been a long time coming. I will try to get some stuff out for you guys this week. Apologies for the delays. Alex's PLTR made and lost on that stock. That's okay. There's been a lot of stocks. Oftentimes when I buy a stock that I have the highest conviction in, it seems as if I lose money there. It's a very weird dichotomy. It's investing and trading is about probabilities, and very seldom will you actually be right the majority of the time. Very, very seldom. The vast majority of my ideas do not work out. And that's actually very normal. I mean, it's impossible to be right most of the time. That's like impossible. The only people who were right most of the time was Bernie Madoff, right? He was apparently right most of the time. And everyone was like, wow, I can't believe it. How is he so good? Oh, it turns out that he was a fraud. And that he was running a Ponzi-like style scheme. Now, I think that Sam Bankman-Fried was running something similar, although he wasn't taking money. Well, I guess Sam Bankman-Fried was taking money from investors, but he was misleading people about how he was running that exchange, FTX. I'm not trying to downplay what he did. I mean, he's serving jail time for what he did, but one of my buddies, well, much older than me, much wiser than me, he said that I always thought Sam Bankman-Fried was weird because he just kept parroting that, oh, I'm not in it for the money, I just really love doing this, and I love the technology and all that. And he's like, in his experience throughout his business life, like, that's just not normal behavior, right? Like, do you ever see, Elon Musk or Bill Gates or Steve Jobs just saying, oh, when Steve Jobs was asked about the iPhone, does he say, oh, I'm not in this for the money, I just love the tech? Like, nobody even asked, right? But Sam Bankman-Fried was like so obsessive with, kind of putting out this appearance that he's this like sweet little nerdy guy. He doesn't like money, he hates money. I'm just like you, I'm just like the normal guy, right? Turns out, he was making a ton of money hand over fist, and he was buying, villas in the Bahamas and, multiple cars and, blowing money on drugs and alcohol and stuff like that. So it's very, very weird, very strange, but that's kind of the textbook markings of a sociopath, right? Yeah. Kind of not having really any regard for anybody else's emotions. Anyway, we are now at the beautiful Herald Square. What's up, Luke? Alex, has any input on SpaceX and the Golden Dome? Is it the next F-35 in terms of dollars coming out of the Pentagon? Well, SpaceX is apparently set to IPO very soon, right? There was an article that came out I believe it was a few days ago, it might have been Thursday, in the Journal. Apparently, Elon wants to give higher priority, or I would say a higher allocation to retail investors. We'll see if that really comes to fruition. I'm a little skeptical, but I think that would be great. At least that's what he says, right? He says that he wants to give a higher allocation to retail investors as opposed to just institutions. Also wants to change the lockup period for some investors as well. We'll see. In terms of the Golden Dome, I don't know. I was reading this article again in the Journal the other day about every single weapon that has been destroyed by Iran, and they gave the price points of each individual weapon, and they also did a deep dive on Israel's Iron Dome. Hold on one second. It's a really loud truck. They did an analysis on Israel's Iron Dome, how much it costs, and the range. I think the Iron Dome can take down a missile within 45 miles from Israel. There was a few other things that have a significant longer range, but the price points of these things are insane. So potentially, maybe a trade, which is, I don't really get involved in the military-industrial complex trade, but with all of the missiles that we are expending over in the Middle East right now, from a defense capability and an attack capability standpoint, I mean, we're going to need to spend a lot of money just to replenish all of what we've used already. So that's probably bullish for the, defense stocks of the world. Vermont says $100K just to build one missile. I think it's a lot more than that. Read that article in the Journal. They did a really good job. They did a detailed list of every single piece of U.S. military equipment that was destroyed, including the, I think it was the F-35 that was, two F-35s that were shot down, and then that horrible crash with the refueling tankers, like tragic crash. But they gave all of the prices. I think they were in the hundreds of millions. Lace mushrooms is $20 million for the good anti-ICBMs. Yeah, I mean, we've been spending a lot of money on this war for sure. I want to be a GMO, says Angel, is definitely the future. Well, that's another, Palmer Luckey, right? Luke says the Patriot interceptors are running at $1 million. Coming up to Fifth Avenue now. Yeah, Deja Vu says no dome is perfect. True. Look at that shot of One Vanderbilt. Whole world windows. I think there is a great opportunity for defense company investors when you look at the convergence of AI and military drone technology. Ukraine is leading the way there. I'm no expert in this stuff. This isn't really my wheelhouse. But what do you guys think of that new laser technology? I don't even know how I would describe it. This is totally outside of my pay grade. But apparently, when the U.S. went in and invaded Venezuela, we used some sort of new technology that was like a discombobulator that I don't even know what it was. I don't even know how to explain it. I don't even know if the reporting about that said weapon is true or not, all right? The Department of War could just be telling us some nonsense because it's classified. I don't know, but I don't even know what to think about all those laser technologies. I don't even know. What do you guys think? The LT Prod says AI is gaslighting us instead of solving real problems. They are putting money into things like content creation. Well, actually not anymore. There was, did you see, that's actually a pretty good comment because to a point, you're right, the LT Prod. To a point, you're right. And there's been a massive change at OpenAI. I'm not sure if you guys saw this, but just a few days ago, Sam Altman made the announcement that they're shutting down Sora. I don't know if you guys saw that, and I made this tweet on X, and I said, you know, this is just really telling us what we already knew, that AI slop is expensive, right? There's a lot of people out there, to your point, that are using AI just to be an idiot, right? To create memes and do stupid stuff. And that's using a lot of energy. That's using a lot of compute. So OpenAI has actually shut down Sora, right? The video maker. Because to your point, probably not a lot of productivity coming out of that. But there are 100%, right? I think technology can be used for good. Technology can be used for bad. And if you're not being more productive with AI, that's on you. That's honestly how I feel. If you're using AI to be a jackass and make memes and do other stupid shit, that's on you. But you can 100% right now be utilizing AI to make your life exponentially easier. Like, oh my God, I mean, AI it's changed my life. It's unbelievable as a productivity tool, as a research tool, as an engineering tool. It's unbelievable. It's freaking unbelievable. But to your point, there's been a lot of waste, and AI is very expensive. That's another topic that we'll talk about and we'll cover probably more on Talks in Wall Street. But, a lot of these tech companies want to build out these data centers and automatically connect to the grid, which is pissing a lot of people off because that's going to skyrocket energy prices within the community, which is why you're seeing these big hyperscalers partner with companies that want to provide a solution to either make maybe on-site small modular reactors, which can then produce their own energy and help them have an easier time to assimilate to the grid. But a big part of it is just cutting out the nonsense, right? If OpenAI wants to IPO at this crazy valuation and perhaps one day become profitable, I think getting your priorities straight and shutting down parts of the business that are not a profit center is a big win, is a huge, huge win. So I'm actually kind of glad that they are essentially putting a bullet in Sora's head and focusing on things that could become a profit center. Caps says, Tom, do you believe all these YouTube AI generated videos actually produce income? I haven't seen too much AI slop on YouTube. at least for me. I've seen a little bit of it, but YouTube has really cracked down on AI content. I mean, as a creator myself, I mean, a small creator, we've gotten emails. What's going on here? We've gotten emails about, the use of AI. Like, there's been many people that have been using AI-generated content and making like these 10-hour-long videos just to like kind of scam the algorithm. A lot of those channels have been shut down. So if you're posting a lot of AI content, YouTube is probably going to take your channel down. Lev versus Tom, are you generating AI programming code yet? Well, I'm using AI to build software, yes. Absolutely, yes. But I think AI within content, if done right, can be pretty good. If done right. Professor Dario says I use Copilot, Perplexity, and Gemini just for a frame of my ideas. Yeah. I mean, it's a really great tool. All of those are really great tools in the investment business. I mean, you can learn just an overview of any industry so well with AI. Sabrina Ferris says, Tom, it's great for developing. It does the heavy lifting, but you still, yeah, for sure. Absolutely. Absolutely. I would say one of the biggest productivity hacks I've used, and I guess maybe it's just, I mean, it could be applicable to many of you too, but I bought a Mac Mini and I'm running Claude, my little Claude bot, and obviously I have it set up in its own dedicated box, if you will, and I text it all the time, just like ideas. If something comes to me when I'm reading an article, I pick up my phone, use voice to text it, hey, put this in a Word document for me. Culminate these ideas. Oh, this could be an interesting pair trade. And by the time I get home, in my notes app is like a very, very structured, bullet point of everything I read, reminders to do this, and it's just made me so much more productive. And I would say the number one thing is I never realized how many things I let slip through the cracks before until you have this, right? It's kind of like having a friend next to you saying, oh, did you do that? Or like having your significant other remind you to do the dishes or take out the trash. There's so much data that we're consuming throughout the day that we just let slip our mind. So if you're reading something, if you're listening to a podcast or reading an article and something really, really pressing comes up that you want to remember, just text your personal AI bot to go into a Word document and start jotting down some notes. And then you could even have that put it in to like a generator, and I make personal podcasts. So like all of these different notes that I take throughout the day, or I have my AI bot make throughout the day, I have my own private YouTube channel where I upload these voice recordings. So I could have, 15 minutes worth of notes, like really, really high quality pressing issues that I can now listen back to. And that's just only scratching the surface, right? That's really only scratching the surface. This is the Steven Schwartzman building. Lev versus Tom, I like Claude. Yeah, it's really great. I've been using Grok a lot as well. And just troubleshooting things. Michaela says, I love Copilot, especially its ability during Teams meetings. Allows me to be present while taking keynotes. Yeah, it's phenomenal. You know, I know this is you kind of have to be careful with what you say here, but I've used AI a lot with my health. Now, of course, you know, consult with your doctor. Don't do this. I'm just doing this, and I know the risks. But, I mean, I've had, well, not anymore. I would say about a half a year ago, I started to have these problems with my legs, of all things. And I couldn't for the life of me figure out what was going on. I was having like these tingling in my legs, and it wouldn't stop. And it was brutal. It was brutal. I don't know how to explain it. Long story short, I was telling AI everything that could have possibly, what I was doing throughout the day, my routine, you know, the bag I was carrying, the type of clothes I was wearing. And a big thing was that obviously I do a lot of walking, and just carrying my MacBook Air on my back while I do these walking tours was probably not good. And it was exacerbating what they call an anterior pelvic tilt. So if you have weak abdominal muscles, okay, and very, very tight hip flexors, and you don't focus on good posture, you could develop an anterior pelvic tilt, which can compress the spine and cause pinched nerves, which can cause tingling in your, you know, lower extremities, in your legs and things like that. So it gave me exercises to do, stretches to do, a full workout routine. And within weeks, right, of actually doing these exercises, 100% cured, gone. And now I focus on my posture more. I'm doing a lot of core exercises. And I guess the biggest culprit was that I carry a bag that's too heavy, right? Too heavy, which is compressing the spine. And since I walk so much, my hip flexors are very tight, which exacerbates this anterior pelvic tilt, which compresses my spine, which pinches the nerves, which causes all of this tingling in my legs. Now that I've been doing these stretches, working on my flexibility, and weight training for my abdominal muscles, it's completely gone away. And that was just from, you know, troubleshooting it with AI, which is really incredible. So, now obviously, you know, you should see a doctor. Don't start, you know, only using AI for your health. Okay, I didn't say that. I'm not saying that. I have to give that little disclaimer in there. Chris says, I had the same nerve issues, but in the shoulder. And you're right, I had surgeons that wanted to operate, but luckily one surgeon just wanted me to do physical therapy and it fixed it. Yeah, a lot of the times it's just if your muscles are out of balance. So when I was in college, I played a sport in college, I played soccer, and I would always be working out, like 24/7, 365. Obviously, as I've gotten older, I'm still in good shape, but I don't really work my ab muscles anymore. So it's created this imbalance, which has created this nerve compression. And now it's great. I mean, it's fine. Anyway, well, that was a lot of fun, everyone. I really do appreciate you guys and girls still coming out, having a chat with me, even though we haven't been doing these streams as much. Again, go ahead and check us out over at Talks in Wall Street if you just want more markets-focused, stock-focused talk. You could do that by typing !talks, TALKS, in the chat. I'll try to get some content for you guys this week. Okay, thank you for your patience. But yeah, if you enjoyed tonight's stream, leave a like, subscribe to the channel if you're new, and who knows, maybe we'll see you guys tomorrow. But be safe, stay optimistic, because you know, the best is yet to come. Optimists will always prevail. Okay, we're gonna make a killing out of this bear market, and we will see the bull once again. All right, let me leave you off with this stunning shot of Grand Central Terminal, one of the greatest buildings in New York, and we'll see you later. So TD, thank you so much. Mohammed, thank you. Western Mass Dave, hope you're well. Out and about, Andy, thank you. Mark, Professor Dario, VLT Prod, Desi, Roberto, Luke, Cap, I want to be a GMO, thank you. We'll see you guys soon. Have a good night.